पुराने दिन। अच्छा, नया लिंक am I visible? नहीं है अपने दिन
Heartiest greetings to all the members who are present online for this very important webcast of the GST and Indirect Taxes Committee on the Budget 2022, which was presented by the Honorable Finance Minister yesterday. We have here with us our Honorable President of the Institute of Chartered Accountants of India, CA Nihar Jambusaria ji, who has come here on our special request and to also have a brief interaction with all of you. Sir, we welcome you on behalf of the committee, President, sir.
Thank you.
Esteemed members, on your screens, you can also see the dynamic personality of Mr. D.P. Nagendra Kumar. It is a proud privilege for us that a member of the Central Board of Indirect Taxes and Customs and a member who is in charge of GST specifically is here with us today for an interaction on the budget proposals presented yesterday by the Honorable Finance Minister. Sir, you have been a great friend of the trade, industry, professionals, rather whoever has come in contact with you, you have left a lasting impression on them, and so is on the Institute of Chartered Accountants of India also. Having known you for more than about 2 decades now, I can say this is the best that has happened to this particular taxation as on date. Sir, on behalf of the Institute of Chartered Accountants of India, on behalf of my president present here, and on all of us, all those who are participating today, I heartily welcome you and thank you for sparing your valuable time. Friends, thank you, sir. Friends, we also have here CA Ranjit Kumarji Agarwal. All of you know him as the Udin Man of the World. I would not say institute, Udin Man of the World. Rather, India is the founder of the Udin as far as the world is concerned, and he is the person who can take credit for that. Welcome, Ranjit Bhai, for being with us. Thank you very much. And we have CA Umesh Sharma ji from Aurangabad, a person who specializes in the indirect taxes, a person who is in touch with the subject on the daily basis, who has come here to enlighten us. And I'm also happy to inform all of you, and you'll also know that he has been elected to the Silver Jubilee, the 25th Council of the Institute of Chartered Accountants of India for the year 2022-2025. And he is one person who adds flavor of GST to the council. Sir, welcome to you. Members, before I proceed to any other formalities, I now request our Honorable President, who has spared his valuable time and who has come with us to briefly interact with you and also offer his opening remarks and felicitations. Honorable President, CA Nihar Niranjan Jambusaria ji.
Thank you, Rajendra Kumar ji. Good afternoon, everybody. The chairman of the GST and Indirect Tax Committee, CA Rajendra Kumar P. My colleague in the council, CA Ranjit Agarwal, very rightly mentioned, the entire UDIN concept was handled and was given birth by Ranjit ji. CA Umesh Gupta, who is today's speaker and incoming council member of the 25th council. A young member entering the council will bring a lot of new ideas to the council. And very importantly, Sri D.P. Nagendra Kumar, member CBIC, Department of Revenue. And again, Rajendra Kumar ji informed us about his contribution in the past and how eager our members are to listen to him. Friends, when budget is presented, for about a week, there are series of such webinars where we discuss the nitty-gritties in the fine print of the finance bill. And with that objective, today's webinar has been organized. The faculties dissected the various provisions which are proposed in the bill, and they will present before us their views. particularly the unique feature of this finance bill, insofar as GST is concerned, is that now a taxpayer who has availed input tax credit but not utilized it, if he reverses it, he will not be subjected to interest. Only if he has utilized, that is availed and utilized, and then he reverses, then only the interest will apply. So this is a very unique and favorable feature which every taxpayer has liked, and it will put to them to a lot of ease. There are many other provisions where the faculties will discuss the nitty-gritties and guide all of us as to how to proceed. And I'm sure that out of today's talk, some points may emerge for even post-budget representation. So the Institute may, if suppose we find that some provisions may create some difficulty on ease of doing, then we may approach and point it out with a request to modify the provision. With this, I thank the chairman and vice chairman of this committee, vice chairman in absentia, for organizing this webinar. And I'm sure that the participants will be so happy at the end of it that every complex aspect of it will be explained by the faculties. Thank you.
Thank you very much, Honorable President, sir, for your brief opening remarks and also for a recommendation to the activities of the committee. May I now request C.A. Ranjit Kumarji Agarwal to also offer his comments on the budget as well as on the activities as far as he is concerned with this committee. Over to you, sir.
Very respected our President of ICI, Nihar Bhai, very dynamic and hardworking chairman of this committee, P. Rajendra Kumar from Chennai. He has worked so hard last year, so many publications he has brought under his chairmanship. So congratulations from my side, sir. Very respected Nagendra Kumarji, faculty and the CBSE board member, and my good friend and younger brother, Umesh Sharma from Aurangabad, newly joining the council. Welcome to this webinar. Yesterday, the Madam FM was boasting that the government has got 1.4 lakh crore GST in the month of January. So one thing I would like to bring to the notice of everybody is this 1.4 lakh crore collection is not possible without the active contribution of the member of the ICI. The way Institute of Chartered Accountants member has facilitated and collected the GST across the country in a small nook and corner of this country, that is commendable. And I must say the study material and the publication which has been brought by this committee is appreciated by one and all. So I think the committee is doing a good job, and I wish this conference and webinar a great success.
Thank you, Ranjit Bhai. Esteemed members, it is now my proud privilege to introduce Nagendra Kumarji here. Friends, I always say that Delhi is the political capital of India, Kolkata is the cultural capital of India, Mumbai is the commercial capital of India, and the South India is the intellectual capital of India. On the screens you see the personality of DP Nagendra Kumar sir, an officer of the Indian Revenue Service, from the city of gardens, from the city of software, Bengaluru, Karnataka. Friends, all of you may not be, or many of you may not be aware that the contribution of Nagendra Kumar in framing the Indian GST law is enormous. The beginnings of this law, the beginnings of GST from the day one, sir has been a great contributory. Having joined the Indian Revenue Service in 1985 with a master's degree in business administration from Bangalore University and a law degree from Dr. Ambedkar Law University from my own city, from where I hail from Chennai, Nagendra Kumar sir brings in an enormous experience of more than 3 decades in the field of indirect taxes and customs. He has been in the forefront of implementation of the IT infrastructure, if I can say. IT infrastructure, training to the department officials, and if today the officials of the Central Board of Indirect Taxes and Customs are up to date in the day-to-day amendments of the changes brought about in the legislation, the credit must go to people like Nagendra Kumar sir. No doubt, esteemed friends, he was awarded the Presidential Award of Certification of Appreciation for Distinguished Record of Service on the occasion of the Republic Day 2009. Sir, with this wonderful remarks credited to you, may I now request you to please address the intellectuals of this country, the chartered accountants. Over to you, sir.
Thank you, Mr. Rajendra Kumar. I hope I'm audible to all of you.
Yes.
Yes, sir.
Mr. Nihar Jamburasya, the President of the ICAI, Mr. Rajendra Kumar, the convener of the Indirect Taxes Committee Chairman, Mr. Ranjit Kumar, and other distinguished participants from the professional members of the Institute of Chartered Accountants of India. At the outset, I must express my heartfelt thanks for the ICAI for inviting me to be attending this workshop on post-budget from the government perspective. I acknowledge the proactive role played by the Institute insofar as the GST implementation is concerned. Being a regular faculty for your certificate course on service tax, and also as and when the GST seminars were held in Bangalore, I had interacted closely with some of your professional members in my capacity in the local zonal head. And I've also benefited from a number of your members insofar as conducting training programs and capacity building programs for GST across the country. And therefore, I felt it appropriate that I think when an invitation came from Rajendra Kumar, I said that yes, I should be participating in this national level workshop and share the government perspective insofar as the budgetary changes are brought in year 2022-23 budget. As you're all aware, insofar as indirect taxes are concerned, we are going to talk about three streams of taxes which have been, some changes have been impacted on these three laws. One, the customs. The second is with regard to the GST. The third is with regard to the excise. In that order, the important changes will also be discussed in detail with your faculty members. But all that I must say is this: Budget 22-23 is a continuing effort in the way in which the Finance Minister has laid down the roadmap while presenting the budget for the year 21-22. In fact, in these 2 years, the country has undergone tremendous challenges in terms of the pandemic. And when we talk about presenting the budget for the year by the Honorable Finance Minister yesterday, I think still we are not completely free or out of this pandemic. And therefore, the changes which has been brought in the budget are to that extent minimal to ensure that there is no disruption insofar as the taxing regime is concerned. Both under direct taxes and indirect taxes, I think that has been a guiding principle. That have no additional taxes, bring clarity to the existing laws, and also to see the object of the government insofar as the larger agenda is concerned in promoting the manufacture in the domestic arena, and also ensuring that I think there is a continuum in the process of providing simplification to the law and procedures. Those were the guiding principles by which Honorable Finance Minister yesterday while presenting the budget on the indirect taxes has laid emphasis. If you look at the changes which have been proposed in the customs side, the customs plays an important role in terms of not only collection of revenues, but also protecting the domestic trade and also ensuring that the cross-border trade happens as per the domestic laws and our international commitments. One of the important reforms proposed in the budget is with regard to the review of the customs exemption notifications. Honorable members may be aware that while presenting the budget for 21-22, an assurance was given by the Honorable Finance Minister that the custom duty exemption regime will be reviewed in order to ensure that the exemptions are in accordance with the changing times, and also to the extent I think where it requires to be pruned, I think it needs to be pruned and redundant exemptions will have to be withdrawn. Acting on that budget assurance, in the current budget, I think the Honorable Finance Minister has mentioned that there has been a comprehensive review of the custom duty exemptions undertaken by wide-ranging consultations, including crowdsourcing of the ideas through the mygov.in application, wherein the feedback received from the general public has been taken note of, and exemption notifications have been reviewed extensively. And consequent to such a review, I think a number of exemptions either have been withdrawn or there is a proposal to gradually withdraw this in a specified time frame. If you look at the custom duty exemptions, we look at some of those exemptions which have been reviewed, taking into account the domestic capacity to manufacture such goods is in existence. Therefore, the requirement of providing exemptions or concessions for the imported material, be it in the form of the capital goods or raw materials for production of the goods, I think there is time for us to take a constant review on that. So this would also bring in simplification, also address issues relating to inversion, and also take care of the domestic value addition in the supply chain. So this is one set of exemption notification which provide for rescinding the concessions or exemptions. At the same time, some of the duty exemptions have outlived their utility because of the sunset clause or they becoming redundant over a period of time. Those exemptions have also been withdrawn. For instance, we had paging services, the floppy disk, etc., etc. Those were things, radio paging devices and all, they become redundant in terms of the technology and innovation which is coming. The third set of exemptions are basically those exemptions which are basically were covered elsewhere in some notifications, but which were a part of the larger scheme like IT 1A bound items, the parts or the components, etc., etc. Though even there where redundancy has been found, some of them have been withdrawn. But the entire exercise of review of the custom duty exemption in a comprehensive manner would bring in simplicity in the customs tariff, because many of the exemptions have been now incorporated into the tariff itself. Many of the tariff lines which were operating with the concession rate or an exemption through a notification route has been built into the tariff itself. To that extent, I think interpreting the custom tariff by the general public would be much simpler today compared to what it was in the pre-budget. Insofar as the rate reduction is concerned, I think the guiding principle in the budget has been to provide for a reduction in rate of taxes in several sectors like electronic, power, and aquatic food production sector, and also in textiles. I think a lot of alignment has happened, keeping those principles in mind. For paucity of time, and of course, this is for the faculty to take you through the details of these things, but suffice to say here that either the reduction in the rate of tax or increase in tax in some cases or withdrawal of exemptions is primarily focused upon achieving those basic concepts that promote the capital goods industry in the country, support the value addition in the domestically produced goods, and also ensure that there is incentivization for indigenous production. But we also were cautious of the fact that some of the protection measures which are given in the past needs to be taken away, keeping in mind the economic reality in terms of the domestic capacity to produce such goods. So this is an object in terms of the tariff changes are concerned. Insofar as legislation in customs is concerned, I think the changes are far and few. As you must be aware by this time, by reading the fine print of the budget, we have brought in certain amendments to section 2, particularly definition relating to the proper officer. We have inserted 2 subsections in section 5.1a, 5.1 in terms of assignment of powers and functions to the proper officer, and also brought in amendments in terms of Section 5455 in the Customs Act, insofar as defining the criteria for determining the assignment of functions in the context of what we are looking at, a transformational change in terms of paperless, contactless customs, what we are looking at a faceless assessment regime. So these are the changing times. So our law will have to evolve according to the requirements. Either to our jurisdiction has been predominantly territorial or pecuniary. But with automated customs automated system with faceless assessment, we need to provide a jurisdiction which need not be restricted territorially to a particular state or a particular port, depending on the specialization and depending on the need for keeping the assessment center in the important places, depending on the expertise and the requirement of geopolitical other things. So we would look upon giving a jurisdiction to a customs officer dependent on criteria like the type of goods imported, the type of person subject to assessment, or for that matter, some intelligible criteria which could be standing the test of the scrutiny of the law. Also, one of the important changes brought in the Customs Act is with regard to Section 14. Section 14 deals with valuation of goods. Now, transaction value is the norm, but there could be situations where the transaction value could be questioned or reviewed or challenged. Now, the purpose of bringing in this amendment in Section 14 is to identify a certain class of goods or certain class of imports based on a identified parameter or a data by which additional obligations on the part of the declarations by the importer may be called for in order to ensure that the assessable value adopted is fair and correct and it is competitively not discriminatory. So therefore, I think when we talk about the amendment to Section 14, we need to keep it in mind that instead of acting on a suspicion or a doubt, what we now look upon by this amendment is bring in an intelligible criteria by which it is based on data, based on evidence, such a decision making should take place. The rules will lay down the details as when we do the subordinate legislation on that. The enablement is only to broadly bring in more transparency and also evidence-based decision rather than mechanically loading on suspicion. That's what our objective is in bringing amendment to Section 14. Now, yet another important amendment what we have brought in is in terms of Section 110A. 110A is a complementary provision insofar as what amendments we have brought in Section 5 insofar as assignment of functions are concerned. While bringing this amendment into the legislation, we have duly taken note of the Apex Court decision in one of the leading judgments rendered in the last year. Following in principles of that ratio laid down in the Supreme Court, we would like to bring in that and a jurisdiction once exercised for the purpose of review, etc., has to be done. It should be done by only that class of officers who had exercised the jurisdiction originally. That's the object of bringing 110A. So that's yet another amendment what we have brought in. Now, data protection, the commercially sensitive data with regard to importers, exporters, we would like to see that that protection of data is given and any violation in terms of publishing without authorization would also not only be treated as an offense in the other criminal laws, but also under the Customs Act. Now, these are the major legislative changes what we have brought, but these are all progressive, what we would call it as either to seek clarity in the law, what has been proposed, or for that matter, bringing certain amendments in terms of data protection, or for that matter, the clarity in the jurisdiction exercised. Now, another important thing in the customs area where an amendment has been brought in with regard to ICGR. Imported goods at concessional rate is one such scheme by which the goods imported for either production for re-export purposes or for that matter, the supplies to other eligible categories. The ICGR is going to be completely automated. It is technology driven, a portal to act upon as a common point of interaction. I think this portal is going to be activated by 1st of March. And let me tell you, with this portal coming into existence, it's going to be absolutely a self-regulated manner in which you'll be declaring this in your portal. All the bills of entry file will get automatically transported here. Clearances, re-export, job work, etc., etc. All of them will be, you will be monitoring it and declaring in the portal through a periodical return and their own any transaction level permissions, approvals are time consuming, procedural, cumbersome process. Now, the ICGR is expected to give a boost in terms of ease of doing business. That's what we are looking at this. And this will be an important supplementary scheme, what we are bringing in with much more relaxation, technology driven, in addition to what we have done in manufacturing and other operations in the warehouse regulations last year. These are all in nutshell I will cover insofar as customs is concerned. Insofar as GST, all of you are aware, the GST is a shared responsibility of both the center and the state insofar as administering this tax is concerned. By and large, the changes what we have introduced in the Finance Bill this year is all in pursuance to those decisions taken by the GST as well as in 45th meeting. Now, this conclusion itself, because all these changes what were regularly in the form of press note and detailing with regard to giving effect to those recommendations, the CGST, IGST Act is concerned. Insofar as the GST is concerned, is twofold. One, we continue with the process of facilitation. The corresponding aspect is also looking into the compliance for which the controls will have to be little more strengthened. So our approach in bringing these changes are governed by these two general principles. Continue with the facilitation function, but also simultaneously do a sort of review of the process to see that they are being in sync with the changing times. We have introduced a series of changes since the GST law came with regard to input tax credit. ITC is the heart of GST. The industry and the trade and the professional bodies like yours have been constantly looking at ensuring the seamless flow of the input tax credit across the value chain. And that is one of the key principles of a value-added tax. Now, we would like to achieve that objective, dovetailing the technology to support us in achieving that objective. In that process, we have also learned in the last 4.5 years of implementation, while the law-abiding citizens have been very scrupulous in following the laid down ratio and the principles in availing the eligible input tax credit, the ugly side of somebody trying to misuse the liberalized regime of registration and an automated process of filing returns on self-assessment basis to take advantage of circulating and floating the fake transactions for undue benefits. So the challenge has been to balance the facilitation and ensuring the controls, albeit the fact that sometimes some of those controls could be bringing pain points. So one of the objectives in bringing those regulatory things in terms of improving compliance, we would like to do it through a system-based intervention rather than leaving the discretion to the field officers to exercise insofar as the taxpayers are concerned in enforcing these things. Achieving this is very, very important. No doubt, in the initial stages, this would find some sort of feedback that it brings in additional compliance burden. But this is the price we need to pay to see that we do not want a human intervention. We do not want a discretion and a non-standard procedure to be followed in terms of addressing the non-compliance areas or the weak compliance areas. So that's our objective, the broad philosophy. Having said that, the first and the foremost, what we are bringing in is that we would like to, as the Honorable Chairman said, the interest liability, which was quantified at 24%, which was calculated on gross tax liability, the GST Council has given a clear-cut direction that it has to be on a net cash. And now what we have brought in is mere availment without utilization leaves zero liability insofar as the interest is concerned. We have retrospectively amended it from 1/1/2017 This is what always been objective of that. Now, insofar as the amendments brought in section 16 is concerned, we have brought in subsection 2 of section 16 an amendment by virtue of class BA, wherein we have provided an additional condition for the purpose of availing credit. These conditions which will be prescribed would take us further in future, insofar as achieving the objective of rejigging the return filings procedure in GST. The original schema of filing GSTR 1, 2, 3 was found to be technically not feasible. I think two-way reporting was adding undue burden with regard to mismatches and the challenges accompanying that. The summary return 3B, by the 4 years into GST, the taxpayers have felt comfortable to settle down with that. Now, we are now bringing in those changes to see that what we have been currently following becomes a permanent future insofar as GST return is filing concerned. Towards that end, our objective is to see that while 3B is a return for discharging the liability, for computational purposes, because 3B is a summary return, so for computational purposes, we need to have a detailed return in respect of outward supplies. So we enrich R1 going forward, get as much information as possible, so that that becomes a facilitative process insofar as arriving at the liability is concerned, also in terms of the entitlement to input as credit. Now, a recipient being asked to reverse the credit has been always been felt unjust. The supplier side who has not uploaded a return or not paid the tax should not come in the way of a recipient having paid the consideration along with the tax to be deprived of the tax liability. Towards that, we have introduced 16(2) AA in the previous year financial budget. So that would bring in, which has been implemented from 1/1/2022. Going forward, we would like to see in a B2B transaction, what gets paid to the government alone should get into a credit chain, because it is like a government check in a private person's hand. On one hand, the taxes need to come to the government coffer. Other end, if it is on a transaction at a business to business level, it has to be automatically flowing back to the person without any intervention. Now, auto population of the GSTR 1 into the corresponding recipient GSTR 2B, carried further to 3B for offsetting the liability, we would like to look at a completely system-driven process. We worked with certain suboptimal solutions like Rule 36(4). We also look at the genuine business considerations where there could be a mismatch between R1 and 3B on account of factors pertaining to timing. For example, if I issue a supply on 30th, invoice is received, but I have not received the goods, obviously I could not have taken the credit. We are aware of those challenges with regard to genuine cases where there could be a mismatch between R1 and 3B. The challenge is how do we capture those species of transactions, provide for relaxations, and the rest of the thing we would like to discipline. So 16(2)BA is an enabling section by which we are saying that the manner in which it will be communicated into 37 and the manner in which it could be taken, all those things would come in terms of a prescription in terms of the rules. But let me assure all of you that even those prescriptions will have the ratification and vetting by the GST Council as and when we come with rules or the corresponding instructions or the formats which will be prescribed by the GSTN. Everything will go through the GST Council's ratification route. The second important amendment what we are bringing in is, we have seen in terms of section 29, where if a person is a non-filer for a certain period of time, the registration need to be suo motu cancelled in order to bring in discipline of filing returns. Now, we have introduced QRMP from 1st of January 2021, consequent to which the return filing frequency has become quarterly and not monthly. So therefore, there is requirement for revisiting that changes. Also, in respect of the composition dealers, we have transferred from the quarterly return filing to an annual return filing procedure. These amendments are very, very consequential amendments. the 6 monthly return is what we have prescribed now. Now, that is in the law. The amended law provision will seek that it would be left to the government based on the recommendation of the GST Council to prescribe that many number of returns of default would result in a suo motu action for cancellation, etc., etc. Now, amendments to section 38, 37 are substantial. Those are aimed at achieving what I said about that living with 3B as well as R1 is going to be a permanent future in the coming years. Now, the constitutional amendments are toward that direction. Now, section 38 proposed in the bill provides the situations in which a credit restriction could apply. If you can look at those conditions, what we have laid on in a detailed manner, you would like to see that a person who is uploading the R1 necessarily files the 3B. And if there could be a difference between the 3B and R1, such of those differences to a point or a tolerance limit will be agreed. Beyond that, the credit flow will be not allowed or restricted. Now, a lot of discipline has happened in terms of return filing, be it on R3B or R1. We have brought in a sequential filing discipline insofar as 3B is concerned. Our attempt is to also bring in the sequential filing discipline in R1 and also toggle these two returns together to see that the liability declared in the outward supply statement and the liability discharged in the 3B return, it remains identical, but for some exceptions that could be handled. Again, the law provides for the government to prescribe exemption from applicability of these provisions by virtue of a notification issued on the recommendation of the GST Council. Now, these would bring in discipline in terms of filing returns. Now, the other changes what we have brought in GST are very, not very high. I would say that. I think they are not major changes as such, but we have also ensured that the consequential changes in 49 and also in terms of the interest classes have been accordingly amended. Some retrospective changes have been made. Those are beneficial retrospective amendments in terms of the waste arising on account of the production of the aquatic feed, except fish oil, retrospective exemption. Of course, a part of it was given by the year 2019. Now we have extended it retrospectively up to 1/7/2017. So also the fee paid for production of alcohol license, we have retrospectively amended from 2017. And these are the amendments which would be in sync with what the GST Council has recommended. Now, coming to the excise part of it, the excise part of it, the changes are very less. One, all of us are aware that we operate excise for a limited products in the name of tobacco and also petroleum products. Tobacco products, the list in respect of the MRP-based valuation has been pruned and very specifically said so, what is appearing in Schedule 4 of the Central Excise Act. And in respect of the petroleum products, keeping in mind the eco-friendly fuel usage in the country, the ethanol blended petrol vis-a-vis biodiesel and the normal petrol, MS and the normal diesel, we need to differentiate in terms of adoption of these bio-friendly fuels. An additional tax of ₹2 per litre is proposed to be introduced from a specified date in respect of this diesel and MS without blending of ethanol or the inclusions like the biodiesel. Now, tariff amendments have been done. To that extent, that has been aligned with that. Now, the broad direction towards which the indirect tax reforms have happened, I would only say this, that there is a certain amount of stability. I think the type of reforms what we are now brought in customs in terms of faceless assessment, coupled with some of the legislative changes what we are looking at, and also promoting the sector-specific approach by which the government wants to promote increase the manufacturing base in India, provide adequate safeguards, and also provide an enabling environment to go a long way in bringing not only the tax buoyancy, but also bring in efficiency in terms of the tax collections. I would be happy to take any questions quickly if there are any with regard to those things, because I've touched upon very broadly with regard to those. Some of them I might have omitted as well. The members are free to ask me any questions. I'll be too glad to inform. Thank you very much, and I'll stop at this point of time. Thank you.
Sir, thank you very much, sir, for a very broad presentation and also for highlighting the salient features of the budget provisions and also bringing out the reasonings wherever such changes were required. Yes, you are very right enough in telling that the input tax credit is the fulcrum of GST, and it is on these very foundations that the pillars of GST are laid upon, sir. Thank you very much. Yes, the trade, industry, and also bodies like the ICAI have always interacted with the government on the seamless flow of input tax credit. But then, as is the practice in the world countries, about 150 countries which follow GST and VAT on similar lines, there is actually nothing called as a seamless flow. It is always, there are restrictions, there are condition-based credits that are available. In fact, in certain countries, we have found that the expenditure on entertainment is allowed as an input tax credit, whereas leisure and amusement are not. In fact, what is entertainment? What is leisure? What is amusement? There's only a hairline difference, I could say. And when to such levels, the input tax credit allowance and disallowance has risen, and I mean, at least God forbid, India has still not raised to that levels to come to the hairline difference of allowing and disallowing the input tax credit. We certainly appreciate and place on record, sir, for the services that you have rendered for in the department in general and for this nation in particular. And as far as the institute is concerned, we will be second to none in ensuring that the GST law is implemented in letter and spirit. Sir, as far as the questions are concerned, we would not like to hold you. We know your time is very, very precious. We do have here CA Umesh Sharma, who will make his presentation and take the questions. We will come back to you, sir, with a promise that we will be at your beck and call as and when required, and we will you will find us intellectually enhancing the GST legislation at all times, sir. Thank you very much, sir. Thank you very much for being with us and joining with us.
If there are any concerns and clarification which requires, please do flag it to us, and we'll be too happy to take it further, and of course to a consultative process. Some of those things are work in progress. Some of them we will try to see exactly what are the changes are impacting. How are they impacting is very important for us, and that will make us more wise in taking it to the further level. Thank you very much, and once again thank ICAI for giving me an opportunity to address all the members.
Thank you, sir. Thank you very much, sir. Thank you very much. Thank you, friends. That was the intellectual expertise of Mr. D.P. Nagendra Kumar. And on your screens, you see the personality, a very smiling and a very a smiling personality of C.A. Umesh Ram Narayan Sharma ji. Friends, he's just out of COVID, let me tell you. And he's just out of COVID, and we sincerely thank you, sir, for being with us. So fresh, I would say, so fresh. It's really refreshing to see you in such a nice program here. Friends, let me take the opportunity of introducing C.A. Umesh Narayan Sharma ji. The 25th Central Council eagerly awaits his expertise, his experience in the council and in general, and GST in particular. At least myself and Sushil Goyalji can heave a sigh of relief at last. We have a third person to share our responsibilities. Thank you, Umesh ji, for making this to the Central Council this time. Yes, a person again with intellectual track record, with a 42nd rank in the CA examinations, diploma in the information systems audit, elected to the Regional Council of the WARs of ICAI for the term 2016-19, youngest chairman of the Aurangabad branch of the WIRC of ICAI. In fact, if some of you would ask me where Aurangabad is where from you go to the Ellora Caves, if I can put it like that. A city that awaits you to visit the Ellora Caves. And next time you want to be there, please take the services of our own Umesh Sharma ji, and he'll be very glad to provide you a hand of assistance. A prolific writer, an author, a speaker, CA Umesh Sharma ji dreams, sleeps, speaks, eats, and brings indirect taxes. Over to Sharma ji for your presentation. Thank you very much.
Yes, sir. Thank you. Thanks to ICAI, thanks to Rajendra sir, my senior in the council and my guide and philosopher in GST. Sir has said that I will be the third person in GST. Sir, you are IGST and we are SGST. So CGST and AGST summation is IGST. Yes, and thanks to Nihar sir and the Indirect Tax Committee team for giving me chance to present before you some points and some major important changes on GST. I am sharing the screen. Please let me know whether it is visible, my PPT. Is this visible?
Yes, visible, sir, visible, very clearly visible.
Okay. So I will try to be very brief, very short, because many of the changes of customs and excise has been taken by Nagendra sir. So I will put more light on the GST related matter, which are the most important for us, for chartered accountants in practice in GST also. So let's focus on that clause by clause. If anything is there, then I will take up into question answer series. Sir, how much time, sir, for me? It's 4 o'clock.
So we will close by 5 exactly.
Okay.
Being online session, will close by 5 with question answers. Thank you very much.
So,
question answers will be in the written mode, which will be there as a Q&A before you, sir.
Yeah,
Thank you very much.
It is there. So I will take near about 30 to 40 minutes and then we will move to question answers. Is it okay, sir?
Yes, sir. Yes, sir. Yes, sir.
Okay. So let's start our discussions. We have first digital presentation of budget this time. So we have first digital currency to be brought in by RBI, which is proposed. Now we can say that it's a digital ITC in GST, because you have invoice, you have goods in hand, but you will get ITC only when it is digitally reflected in 2B. And that 2B is also provided by the department, not as per your books of accounts, but it's a digital ITC, I can say. So how we are moving toward digital ITC, we will look into it. There are many challenges, but yes, we have to face the challenges and go for this change, because it is going to be the day that every ITC needs to be reflected in 2B in digital manner. So let's start our discussions. The proposed amendments which are there in the Finance Bill 2020, they will be effective from the respective dates and after passing by the respective states and union territories with the legislature. So when we study GST, there are the recommendation of GST Council, which we have to remember. When these recommendations comes in the face of notification or law, we have to remember that. And also we have to remember when they will be effective. So a lot of time takes when the bills, the section gets applicable. So we have to study hard and keep the dates in our mind. So GST, you must know when the section is effective. Right now, these are all proposed amendments. So I am going to take major amendments. So first is section 16(2)(a). Sir, Nagendra sir has already dealt in. It's related to eligibility and conditions for taking input tax credit. So major thrust is on input tax credit. So what is the first insertion? The insertion says 16(2)(a). The details of input tax credit in respect of said supplies communicated to such registered person under section 38 has not been restricted. So what does it mean? the restrictions of Section 38, which are going to be there, they will be applied to the eligibility conditions of Section 16 to 16. So whatever ITC is eligible, and if we want to avail it, so they should also not be blocked in Section 38. Like block credit in Section 16, 4 or say Section 17. Now we also have to look into Section 38, whether that ITC is not restricted under Section 38. Recently, Section 16(2)AA came into the play with effect from 1st of January 2022. It says, it puts one restriction that the details of invoice, debit notes are furnished to the supplier and the details are communicated to the recipient as manner specified in Section 37. So slowly, we are going toward digital ITC. Section 16(2)AA, now 16(2)BA, then Section 37, Section 41, Section 38. So this all we have to keep in mind, and by step we will learn what is the impact when we go to the next slide. Then there is a small word omission in Section 16(2)C. What is this omission? Section 43A reference has been removed. So what does this mean? The old regime of matching and mismatching of ITC has gone. GSTR1 filing before 11th and reflecting it into 2A before 15th has gone. Now 3B with GSTR1 and 2B reconciliation is there. So the old 43A section has been omitted from everywhere. So this has also been removed from 16(2)C section. So most important now comes is Section 41, which is going to be there in coming slides, because that is the section where it says that the tax is actually paid and utilization of ITC will be there, subject to that the supplier has paid tax, and if the supplier has not paid, then recipient has to revert the tax. We will look into that in further slides. Then third amendment is in 16(4). Friends, this 16(4) amendment is a welcome amendment. Earlier, up to September month due date, that is 20th of October, we will able to claim input tax credit which has been remained for the previous financial year. Now we get an additional 40 days benefit more. So up to November of the following financial year, one can get ITC, or one can take the effect of invoices or debit notes or changes or any amendments in these invoices or debit notes can be done up to 30th of November of next financial year. So it's a relief of 40 days in claiming ITC. Then next is cancellation of registration, substitution in Section 29(2)B. What is this? Earlier, for a composition dealer, the returns for 3 consecutive periods, if not furnished, the registration is liable to cancel. Now the amendment has come in. The return for a financial year beyond 3 months from the due date of furnishing of said return. So in case of composition, if we simplify, GSTR4 is the annual return which need to be filed. So if we file that GSTR4 before 31st of July, then it is okay. If we don't file up to 31st of July, the registration may be liable to be cancelled. So this is the new amendment which has been brought in. Then another cancellation restriction, this is for the normal taxpayers. A return of past 6 months, continuous past 6 months not filed returns, then the registration is liable to be cancelled. That is the old provision. What is the proposed new provision? such continuous tax period as may be prescribed. So the 6 months criteria has gone. Now the rules will be prescribed in future, and the 6 months period of continuous non-filing may be reduced to lower period, and the registration of that person is liable to be cancelled if he doesn't files the period, the returns for that particular prescribed period. So we will have to wait for the rules in future to give the effect of this amendment. Then credit note and debit note amendment is there in section 34(2). What is this? This is another consequential amendment. We get 30th November of the next financial year to incorporate any changes in the credit notes of the previous year to the subsequent period. So it is a change which is available to us. So we can issue credit notes, or if we want to amend the credit notes, that can be done up to 30th day of November of the next financial year. Earlier, it was up to due date of September, 20th October effectively. Then section 37(1) amendment. Now friends, we are on very important amendment, that is GSTR1, because according to me, GSTR1 is the most important document in GST. If a taxpayer files correct and complete and timely GSTR1, he has done compliance of GST to the maximum level. Why? Because GSTR1 of the supplier becomes the GSTR2B of the recipient. So the filing of GSTR1 is the key for correct tax compliance in GST. So what are the proposed changes in GSTR1? Earlier, the old provision says shall be furnished electronically. So there is no word now shall be furnished electronically. So what will happen? Now, subject to such conditions and restrictions. So the rules will be there that you can file it electronically, you have to file it on continuous basis. The rules will be prescribed, or in case of the e-invoicing, it will be automatically reflected. The conditions and restrictions will be there in future. And such conditions and restrictions within such time as manner may be prescribed be communicated to the recipient of the said supply. So once we file GSTR1, it will be communicated future to the recipients. So mere filing of GSTR1 may not be condition, because we have to link it with 3B also. So GSTR1 combined with 3B, it will go into 2B, or a reversal will come if only GSTR1 is filed. So we have to see the conditions of filing of GSTR1 when the rules will be coming in the future. Then we come down to the next amendment in section 37(1). There is a omission. What is omitted? The old matching mismatching regime has gone. So that proviso has been removed. What is the impact now? You can file GSTR1 before 11th of every month. If we file before 11th, it will get reflected in 2B in the same month. But what happens if it is filed after 11th? It may not get reflected in 2B. It will go into the subsequent month, and the recipient will get ITC late. So the earlier condition that the time for filing of GSTR1 up to 11th day, that has been taken up, and now you can file GSTR1, but the reflection of that in 2B is very important. So please note that. So filing GSTR1 before 11th is still a mandatory and compulsory if you want to give ITC to your recipient in time. Next, proviso 37(1), furnishing of details of outward supplies. What was the old proviso? provided further that now it's provided that. So the second proviso has become first proviso. It's a consequential amendment. So same has come. The third proviso has become second proviso in section 37.1. We will not discuss more on that. Then we go for 37.2, which is omitted now. So what is the impact? The old matching, mismatching return filing system has gone. It has become redundant after implementation of 37, 38. So that has been omitted. Then we come down to the next, substitution. Here also the matching, mismatching reference of 42 and 43 has been removed. So it has been linked with the new system of return filing now. And whatever errors and omissions are there in the return GSTR1, that can be corrected and that can be done now also. Next is in 37.3. What is that? Whatever rectifications, errors and omissions are there in GSTR1, they can be done up to 30th November of the subsequent year. So friends, 30th November will be the most important date in future for amendment of GSTR1, for the credits, taking for credit note, debit notes. Now we come down to next is 37.4 clause section. Here also, in case of GSTR1, a registered person shall not be allowed to furnish the details of outward supply. This is a new section provision in the section which has been brought in. What is that? GSTR1 is not allowed to be filed for a tax period if the details of outward supplies for any of the previous tax period has not been furnished. So it is the cumulative filing of GSTR1 which is made mandatory. So every month GSTR1 needs to be filed. If 1 month GSTR1 is not filed, you cannot file the GSTR1 of next month. So this is very important amendment which we have to keep in mind, because there were many taxpayers who were filing 3B, not filing GSTR1, or they were filing GSTR1 but not filing 3B. Now the link between GSTR1 and 3B is very important, and if any link misses, then that is going to be an issue. Next, now we come down to the ITC related amendments in section 38. Friend, this is very important. Please keep in mind, the heading of the section itself has been changed. The earlier heading was furnishing details of inward supplies. Now, what is the heading? Communication of details of inward supplies and input tax credit. So word input tax credit has been brought in. Earlier it was furnishing details of inward supplies. Now it is communicating the inward supplies and also ITC. So according to me, this is very important change, and one must keep in mind the amendments in section 38. So by this, the details of outward supplies which are furnished by the registered person under subsection 31 of 37, such supplies may be prescribed, and an auto-generated statement containing the details which we call as a 2B of ITC shall be made available electronically to the recipients. So it is a duty of the GSTN to make it available for such supplies in such form and manner within the given time and subject to such conditions and restrictions. So for claiming of ITC, this section 38(1) will play a very important role. But we have to wait for the rules to be brought in for the same, because such conditions and restrictions may be prescribed. So one has to wait what will be the future restrictions and conditions in the rules. Now we come down to the next in section 38. The entire section has been substituted, and 38(2) has become a very important section now for ITC. Just like section 16 and 17, the block credit, now it's come down to 38.2. So what is that 38.2? The auto-generated statement, that is 2B, shall consist of, my friends, now please give your attention to this word. The details of inward supplies in respect of which credit of input tax may be available. So what is my understanding here? The word may doesn't mean shall. It's not mandatory. So may be available. So whatever entries are reflected in 2B, the ITC may be available for that. So it is not that it is compulsory to claim that ITC, but it will be may available. But when we read the restrictions in B clause, the details of supplies in respect of which such credit cannot be availed on account of the details of the said supply being furnished. And now come the conditions 1, 2, 3, 4. So what I want to tell, for ITC, they have used the word may. And for restriction, they have done cannot be availed. So bluntly and straightway they have said cannot be availed. So what are these restrictions? The 2B will come up with the facility to show which are the inward supplies where the recipient will be eligible for ITC available, and which are wholly or partly not available, which are the conditions, which are the restrictions. So according to me, it will be a complete statement of ITC. It will be auto-populated, and one has to look into that on every month. Cumulative basis, we have to see. If we take a ITC of February month, if subsequently the supplier doesn't file, then in March month that may come up into our 2B that you will not get ITC because 1 was filed, 3B was not filed, so you reverse it. So on continuous basis, we will have to look this 2B of our taxpayers. So what is the first condition? If we go by any registered person within such period of taking registration. So there can be in future a restriction of taking ITC from a newly registered person. So what will be the restriction? We will have to see, because many fake ITC issues have come up that the person has taken a registration, issued the invoices and ran away. So there was no filing of 3B, only GSTR1 was filed. And when the matter came in front of the officer, they were not able to track that newly registered person. So the restrictions may come in future that in case of a newly registered person, you will not get ITC for certain period or after certain conditions or restrictions. Second case is by any registered person who has defaulted in payment of tax and where such tax has been continued for such period. Means the person is not filing 3B, he is not paying the taxes, there is a default. In case of such supplier, the ITC will not be available. If you have taken that, then it has to be reversed subsequently. So this will also be prescribed. And in 2B, there can be a different column or say the summary of these transactions coming up, and we have to keep the track while filing every return. Then the clause 3, output tax payable of the supplier which he has furnished in GSTR1 and 3B, there is a excess output tax payable. Means what? The GSTR1 is filed, and 3B is filed for the low, but more is there in GSTR1, the output tax payable. If the difference is there, then that ITC fully or partly may be disallowed. We have to wait what will come in the future. Then fourth condition, availed input tax credit, means the supplier has availed the input tax credit in excess of the credit available to him. This is very interesting. How a person will come to know that my supplier has availed the input tax credit which is more than the input tax credit available to him. So my ITC is disallowed. Next condition 5. Any registered persons who are defaulted in discharging his tax liability under section 49 with certain conditions and restriction, and any other class of person as may be prescribed. So it is going to be a very tough time, because the recipient is not having any machinery to control the supplier, and the defaults of the supplier will be punished in the hands of the recipient, and this is going to be create some issue for the genuine taxpayer. Already Nageshwar sir has said that there will be some teething problem, but slowly, eventually the system will take care, and there will be no manual intervention of the officers, no discretionary power. So it's a system driven system of ITC which they are proposing. So we have to follow that. Then now quickly go through 3B amendments which are proposed. These are related to the non-resident taxable person. He has to file return within 13 days from the end of the month. So we will not discuss more on this. Then we go to next, substitution of proviso in 39(7). Here, very important that every registered person who is filing 3B, here has been given an option that whatever amount is there in 3B, which is payable, in lieu of that amount determined with certain conditions and restriction, he can pay. An option is given to them that they can pay the amount as per 3B or an amount as may be referred. So I think it's an installment system or a self-assessment tax system, and that option will be given that you pay the tax on for the regular taxpayer. We have to see what comes in the rules regarding this compliance of this section, but it will be helpful if you are not having that much of cash in a hand, but you want to pay through installment or like that. Then section 39(3) amendment. Here also reference to 37 and 38 has been removed. It was earlier there. Now it is just a consequential amendment. Then substitution of proviso. Here also rectification can be done up to 30th of November. It is a consequential amendment. We have seen that the September due date has been shifted to 30th November for the next financial year for every changes or every revision. So the same is applicable for 3B also. Now we come down to the next change, substitution in 39(10) section. A registered person shall not be allowed to furnish a return for a taxpayer, means 3B is not allowed to be filed if following are the issues. What are the new restrictions? The details of outward supplies, that is GSTR1, has not been furnished. So GSTR1 is not furnished, you cannot file 3B. And the government can also bring in some restriction and put some conditions that in which cases it can be given a chance that you can file 3B even though GSTR1 is not filed. But for the regular taxpayer, this is a very important restriction now. If GSTR1 is not filed, then 3B cannot be filed. So this is the takeaway from this amendment. Next is now in section 41. Friends, I think this is very important for input tax credit availment. And here they have proposed the change in subsection 2 of 41. What is that? The recipient will get credit of input tax credit in respect of such supplies or goods or services or both, whereon tax has not been paid by the supplier, and it shall be reversed along with interest by such person in such manner as may be prescribed. So this is going to be a very important restriction for claiming of ITC. If the tax is not paid by the supplier, the recipient has to pay the interest, reverse it, and subsequently if the supplier pays, then reclaim the reverse credit. This is going to create a very big impact. Earlier, this section was having provisional acceptance word. Now it has removed, and the section heading is availment of input tax credit. So section 41 is going to be a very important, and it is going to be a continuous process which needs to be done on every monthly return basis, and availment of ITC and the reconciliation of reversal need to be maintained, and that is going to be the key for ITC compliance in future. Now, omission of section 42, 43, 40A, which is a consequential amendment, because the old system of return filing 1, 2 has gone. Now, complete new set of sections have come in. Section 16 to AA, section 16 to BA, 37, 38, 39, 40, which are going to be the important for our return filing. Then late fees here for the TD, the tax collection at source also under section 52, late fees will be applicable if the TCS returns are filed late. Then there is a small consequential amendment. Section 38 has been removed for the authorization of goods and service tax practitioner. Need not to discuss more. Then in section 49(2), they have removed section 43A, which is a consequential amendment. Again, now we come to next important and a facilitative amendment. What is that? In case of a distinct persons, means having a multiple state registrations, the IGST and the CGST, which is there in electronic cash ledger, it can be transferred to the another GST number, which is a distinct person, and it is helpful for big corporates because they are having amount in one state and they want to pay in another state. They can transfer from one GST number to another GST number. With certain conditions and restrictions, the rules will come in and we have to comply with that rules for this transfer between the two distinct persons. It's a welcome amendment. Now we come down to the next amendment. I think we are going toward the excise era again. Earlier in excise, you have to keep some amount in PLA and you can utilize SENVAT to certain extent. Here also they have taken up the power that they can recommend and specify with conditions and restriction maximum portion of output tax which may be discharged through electronic credit ledger. Means if there is a X amount of electronic credit ledger balance, you can utilize only X amount of against output tax. You cannot utilize 100% electronic credit ledger balance. So this will be a very restrictive provision. Rules need to be known. We have to wait for that. But a question arises, how it will be valid to stop the eligible ITC, which is there in electronic credit ledger, again discharging the output tax liability. So let's see what happens. Already 1% provision is there to be paid in cash under Rule 86. We have seen it in past. Now this is new section amendment. Interest on delayed payment, already this has been discussed. It is a welcome that now interest is only applicable when there is availment and utilization both. So there were few instances that you wrongly availed, interest was charged, but now this is retrospective amendment. It will be benefit to a larger extent to the taxpayer and it's a welcome amendment. Then tax collection at source, here also you can amend up to 30th November, whatever changes are there in TCS return. It's a consequential amendment. Then refund of tax, here if there is an excess electronic cash ledger balance, RFD 01 can be filed. It's a clarificatory amendment. Then next is the refund of tax rule, the section 54(2) amendment. The time limit has been proposed. Now it is changed from 6 months to 6 months to 2 years for claiming ITC in case of refund, in case of UNO and foreign assembly cases. One can go through this amendment in detail. Then next is a consequential amendment. It's a date amendment, that the due date for filing of refund, it will be the it is related to the restriction. The refund will be stopped by the officer if it is pertaining to the unutilized tax credit also. Earlier it was not there. Now the officer has a power, if there is a tax or interest or any penalty which is payable, the refund of unutilized tax credit can be stopped, or if there is a default in filing of return. Then section 54 amendment is there. It is related to the zero rated supplies to SEZs and EOUs. It's a clarification that what will be the date taken for the refund. It's a due date of furnishing of return. Then power to issue instructions or direction. The 38 section has been removed from here. It's a consequential amendment. Now, this is the last slide. I have taken 30 minutes to 35 minutes, and then I will go for question answers. Here, I have taken up the journey of ITC. Earlier, from 1st July 2017, section 16 was brought in. It says seamless ITC. Then from 1st October 2019, Rule 36(4) restriction came in. It says 120% of GSTR to A. Then came in from 1st January 2020, 110% of 2A. Restriction has been brought down. Then from 1st of January 2021, Rule 36(4), that is 105% of 2B came in. Now from 1st of January 2020, which we can say is a GST 2.0, digital ITC, here comes the section 16(2)AA. So ITC as per 2B will be allowed. But in future date, when we read the amendments today, section 16(2)BA read with 38 and 41. So it will be ITC as per 2B, but with restrictions and conditions. So, as rightly pointed out by Rajendra Kumar sir and Nageshwar sir, that in future, the ITC movement will be more restrictive and with the conditions, and that is the journey of ITC. Let's see what comes in, but my humble request is that the genuine taxpayer should not be harassed. They should be provided machinery to know who is the person making the default, and the reconciliations and all the ITC corrections and the effect of reversal if not tax paid by the supplier, all these things. In this case, interest should not be there on the recipient genuine ITC taker. That was the one of the point. Now I thanks to all for your patient hearing. Thanks to IDT committee, and if the permission of the chair, shall I take questions now, sir?
Yes, Umesh Sharma ji, thank you very much for that wonderful presentation. I hope you're able. We are audible from the institute. We are audible, sir. Yes. Thank you very much. Yeah. Thank you very much, Umesh Sharma ji, for that wonderful presentation. In fact, so much stress and so much importance is given to the input tax credit. You also mentioned that in your presentation. You brought out the amendments. In fact, I would only say here, from the times the moderate credit has been there and send-back credit has been there, there have been significant changes, amendments, maybe on a monthly basis, on a quarterly basis, half-yearly basis, and so on. And in fact, one of the very major notification which was I think done in 1990 or 92, I exactly don't remember. It was with respect to the inverted duty structure. It was in relation to central excise, and it was in relation to inverted duty structure in the case of automobiles. Now, it goes like this. The automobile sector was under inverted duty structure. They had accumulated huge amount of credit in their books of accounts. And the government was not getting even 1 rupee revenue from the sale of automobiles, from the manufacture of automobiles in India. One fine evening, quietly the government of India introduces a notification that the amount of credit standing in the books of accounts of all automobile manufacturers shall lapse. And the entire Automobile Association goes to the Supreme Court by way of writ, and then Supreme Court said, look, someone has given you credit. Doesn't he have the right to take it back? Yes. So what is wrong about it? They've given you credit, they've taken it back, that's it. So it's like, jo deta hai, usko lene ka bhi to hak hai. That is how you think. The person who gives has a right to take it back. And that is what is the story of input tax credit is all about. Things will keep on changing. Amendments will keep on coming. And that's how professionals like you and me, intellectuals like you, will always be there to guide everyone. Yes, sir. Now to the question, there are a few questions, maybe certain important questions you can take if you can see on your screen, or I shall read it out as the case may be, sir.
They are visible to me.
Wonderful. Please take it.
There are near about 50 plus questions, sir. So yeah. According to time, I will take some few important questions. First is the how can the condition in section 38 be complied with? They are just next to impossible. Actually, we have discussed this. These are going to be a tough time. Then next important is section 41 of CGST Act is been substituted so as to do away with the concept of claim of ITC on provisional basis. What is meaning of this? Earlier 2 was there, so whatever ITC was there, it was on provisional basis. Now what they have said that in section 41, whatever ITC is there in 2B as per 37-38, you will get it, but you will have to reverse it if the tax is not paid by the supplier. So that provisional basis has gone. Now it will be on the actual tax payment basis by the supplier. On the basis of GSTR 1 filed by supplier, you will get the ITC, but he has to file 3B. So once that matching is done, then that will be the full ITC. Otherwise, till the filing of 3B, it will be provisional. And if it doesn't file 3B, then reverse it and pay with interest. That is the very tough task on the recipient. Then second, next query is, the finance bill has proposed to omit section 42-43. Demand has been raised based on this section in 2017-18 in many cases. What is the implication of removal of this section on the earlier demand? This is a good question. The omission of the section are yet to be notified because all proposals we have discussed, but in 17-18, 18-19, they were there, but practically they were not implemented. And yes, the notices are issued in ASMT 10 to the taxpayers on the basis of mismatches. Friends, here I want to put a point that Rule 36.4 came in from 1st October 2019, which we have seen in the journey of ITC dates. So if the notices of 17-18 are coming for mismatches, we have to legally fight because there was no section 16.2AA or Rule 36.4 that time. And if the genuine ITC, if there is a reconciliation available, then yes, ITC should be allowed. Then another important question is Section 16(4) has been proposed to be amended so that ITC for financial year can be claimed up to November, which falls on 20th of November. Oh, there is some confusion in the query. Actually, they have done away with the due date. Earlier, it was the due date of September, so it was of 20th October. Now they have specifically mentioned 30th November. So up to 30th November, we have to claim the ITC. So there is a very little time gap available. It's a 40 days time gap. Now next query important is interest rate under section 53. Since inception of GST is 18%/24%. If 18%, then what about interest already paid at the rate of 24%? This is good query. If the excess interest is paid and if the retrospective amendment, then it should be eligible for refund. But how to claim the refund, that will be the issue. So we have to do it on the manual basis, because to claim the refund, which is of interest, which is paid by 24% instead of 18%, is going to be a follow-up task with the officer. Then next query is related to sales of MSIC script. I think it is not there completely visible. Is penalty leviable?
No, this is, sir, this is sale of MAS script is exempt under GST law, but department now issued notice to reverse proportionate common credit because you have exempted supply. And if we do not do so, that cost is more than 5% of script sales price. And now one can take input tax rate of this. Is in case of MAS reversals required? Please, sir, my query. Thanks in advance. In fact, I am also not able to understand this query. You may write to us, Gulab Bhavnani ji from Mumbai. You may write to this. You may write to us at this gst@ica.in, and we will try to help you out in this, sir. Yes, proceed.
Yes. Then next important query seems is penalty leviable if ITC claim in GSTR 3B exceeds by 10% of ITC available in 2A/2B? Sir, Sankaran sir, penalty is a very different aspect. What wrong has been done, and if it is genuinely available ITC, even though it exceeds 10%, you can fight and take the ITC. In this genuine ITC case, penalty should not be leviable. Then next query, newly started restaurant has a ITC of a construction work. Is it adjustable with the current liability? Construction work, immovable property, if it is capitalized under building, no ITC, so it cannot be adjusted against current liability. It's a block credit under 17(5). Then, in light of record GST collection in January 22, going forward, this is going to increase further. Do we see a switch over from direct taxes to GST in coming years? Interesting question, but it cannot be answered. Income tax will stay. Then next query. Sir, if as per 2B only ITC allowed, then omission bill of previous month, how can we take in successive month? Any issues coming up? I think omission bills means the supplier has not filed in GSTR1 and he files later on. So when it will be reflected in the next month, that month you will get ITC. Our books of accounts, our ITC as per books is now going to be a very big issue to make a reconciliation with 2B. So in many genuine cases, you may be correct, but it is not reflected in 2B. So ITC will be available only when it is reflected in 2B. But we have to wait for amendments also. 16.2 AA has come in, but 16.2 BA yet to be notified. So till that date, the law is different. Then whether, next question is whether restriction period under 38(2) of CGST Act will be applicable even if I fulfill conditions prescribed under section 16(2). Arun Maheshwari ji's query. Sir, this is very important query that section 16(2) compliance is there. I have the invoice, I have the goods in hand, everything is correct, but it comes under restriction of new section 38(2). Then my ITC will be restricted. It is correct, your ITC will be restricted. We have to wait for the rules to come up, and then we can comment more on this query. Then next query. Is there any roadmap for simplifying GST law to make it really good and simple? After looking to the discussion of finance bill from clause, proposed changes, which are more in favor of GST officials and very few of them in favor of taxpayer. As pointed out by Nageshwar sir earlier, they don't want the discretionary powers of officers to play in case of ITC. So the system-oriented ITC claim, digital ITC has been brought in. So there is going to be issues with the genuine taxpayer, but hope the law will give benefit to such taxpayer because he has paid the money to the recipient and the default is of the recipient. Let's see. Sir, I think there are more queries pouring in. So, shall I take more queries? So, I am going to take more queries. Next.
Queries which you and I can answer, we can take, sir, but not all the queries which are there. So basically, there are certain queries which the industry has to take up.
Yeah.
As an institute of Chartered Accountants of India, as a creation of the Parliament of this country, we have our own constraint in taking up certain issues. Certain issues, the industry, the trade bodies have to take up and bring it to the light to the government. For example, the issues with respect to restrictions in ITC is concerned or the matching is concerned. We can handhold, we can support. But then where a client or where the industry has to take up, it is their job and they will do it much better also. That's what I would like to tell, sir.
Sir, please, one important query this we can discuss. From Sholapur, Pradeep Singh. Sir. IGST paid on import are not reflected in 2B due to IceGate. Whether we can claim ITC of IGST paid on import not reflected in 2B as the amount is huge in crore. The answer to this query is yes, you should claim that ITC which is paid as a IGST on imports. And even you can go ahead with the claiming of ITC in case of RCM on the payment basis, because these are the two transactions which are not catch in 2B. In between, there is some facility given at IceGate recently. There is a circular also. I am not able to remember, but you can activate that facility. So from IceGate, that data will be get reflected in 2B. That facility is in progress and it will be in due time. The import payments made will also get reflected in 2B. But RCM payments, we have to take on our own ITC. So these two transactions, we have to take ITC, even though it is not reflected in 2B.
Yes, sir.
Yes.
Sir, thank you very much. Now, in a nutshell, if I may ask you, in a nutshell, Just maybe
Yes, sir.
one word, only one word. What do you feel about this budget 2022? Frankly.
Sir, frankly speaking, we are going towards digital compliance now in all areas, not in GST, but in every area, banking, land records, and in agriculture also, in health sector also, because the health card will also be digitalized. And in 2014 to 2014 or 17, India was on 84th number, I think so, for digital governance. Now in 2020, we are top 5 in world, the government in digitalization. So digital governance is going up, and we have to cope up with it. We practitioners have to be in very much speed to catch up with them. We cannot live in the old era. And in nutshell, what I want to tell is, sir, now it will be ITC bank. GSTN is your bank account of ITC. So if you have a payment in your bank account, you can pay to another person or you can withdraw. So it is a bank account of ITC.
Thank you very much, sir. Very rightly told by you. We are moving towards a totally digital economy, devoid of any paper, devoid of any physical documentation. Yes, it will continue to be there, but then to a lesser and lesser extent. And friends, with respect to the indirect taxes, I would also request you to go through the budget papers on customs rate changes that have happened. In fact, budget indirect taxes is not merely GST. GST, the budget is every month. Every month when the GST Council meets, it's budget GST, friends. So thank you very much, Umesh ji, for
Yes,
a very
sir.
enlightening presentation. Yes, sir, please tell me.
One suggestion, sir,
Yes.
we can take up, that B2B transactions, e-invoicing should be made mandatory. So it will be automatically get reflected in one, GSTR 1 and 2B, which is the dream. So we should move toward that. So this type of mismatch will be less. E-invoicing
Sure.
for ITC. For every ITC, e-invoicing.
Wonderful. Sure, sir. We'll take it up. And of course, your coming to the council will certainly add weight and impetus to whatever that we do in the committee. Thank you very much. Friends, we from the GST and Indirect Taxes Committee signing off from you now for the budget 2022. We are always available for your queries, for your questions, and all the clarifications that you seek from our committee to the extent that is possible from us. Do write to us at gst@icai.in. We are there to handhold you. We are there to support you. We are there where you want us to be there. Thank you very much. Thank you, Umesh ji.
Yes, sir. Thank you. Thank you, sir.
Jai Hind. Jai Hind.